Our final conference presentation, it comes from none other than Addison Snell, CEO of Intersect 360 Research and veteran of the high-performance computing industry. Mr. Snell launched the company in 2007 as Tabor Research, a division of Tabor Communications, and served as that company's VP and GM until he and his partner, Dr. Christopher Willard, acquired Tabor Research in 2009. During his tenure, Addison has established Intersect 360 Research as a premier source of market information, analysis, and consulting. In 2010, he was named People to Watch by HPC Wire. Always great to have you, Mr. Snell. We look forward to hearing the latest on the market. You may begin.
I'm Addison Snell with Intersect 360 Research. Thank you very much, Mr. Sparks, and I'm sorry I'm not in the UK in person. I always look forward to these HPC AI Advisory Council events, and hopefully we'll be back on the road next year. I know we're a little bit over time, and I have way too much content, so rather than go even further over time, I'm going to attempt to present an overview of it very quickly and leave room for questions at the end if anybody has any. My theme this year has been supercomputing to the rescue, talking about the role of HPC and supercomputing in a wide range of application areas. I'll go through our market model and forecast and some new research we have on user ratings. I'm going to include in the forecast the effects of the global COVID-19 pandemic, which are having a dramatic economic effect in the market this year and over the course of our forecast, and we've released a forecast revision based on that. The big theme over the last couple of years has been this idea of the new HPC, and there's nothing new here. We've seen over the last 10 years the effect of cloud in the market, and we had Andy Jones give a really great presentation on the relationship of hyperscale to HPC. We've tracked the hyperscale market separately. I did know that there was more than an aggregate exaflop out there when you look at how much the money the hyperscale companies are spending on their infrastructure every year. It's quite a bit. We've also had the whole wave of big data, data science, data analytics out in the market, and now machine learning and AI. And all of these have had an impact on what we can look at as the high-performance computing market. But HPC in of itself is still a long-term stable market, even regardless of these other influences, just because we don't run out of science to do. There's always a new threshold pushing us forward. In that vein, we welcome the Fugaku supercomputer. There's a lot of noteworthy things about this supercomputer at Recon. It's using an ARM processor. We've seen a lot of dynamics around the processor elements in this space with Intel and AMD and x86 now, a sort of falling back of the IBM power processors. I got a sunbeam coming at me right now. I'm going to try to move a little bit. ARM is now bursting into this space, and all of these are having an impact in the top 500. Fujitsu with its Tofu interconnect is interesting here, and we've also seen as another trend in supercomputing a certain number of the high-end vendors going back toward custom interconnects for the high end of this space. That includes Fujitsu with Tofu, Bull with BXI, and then in the U.S., very notably, Cray, now part of HPE, with Slingshot, which is going to be behind all of these this new generation of DOE systems. Another big story this year is the role of the supercomputing community in combating the COVID-19 pandemic. This has been one of the most inspiring things about our industry, is the way that we can throw resources at some of these grand challenge problems. We've seen it in the U.S., we've seen it in Europe, we've seen it in Asia. We've talked about it on our podcast in a number of different ways, and I don't need to rehash them all here, but if you're a researcher who's on the forefront of looking at either modeling the virus itself or looking for drugs or modeling the spread of a pandemic through the population, hopefully you haven't had any trouble finding HPC resources that can be dedicated to that sort of problem. Beyond that, when we look at grand challenge problems, and this is on my theme of supercomputing to the rescue, particularly if you ask a younger generation about the problems of our time, talk about climate change, pandemics, how are we going to have food or clean water or new energy sources in a world going to 10 billion people in population, natural disasters from hurricanes, tornadoes, wildfires, tsunamis, understanding the universe, new developments in AI, robotics, 3D printing. All of these things have a role in high performance computing. And as I said at the top, we're not going to run out of these things. There's always a new forefront in science, and HPC gets deployed in all of them. So whatever it is that's your passion right now, I think we're going to see new deployments. I'd like to give a quick example that's been in the course of my career. When we were at the brink of terascale, really when terascale was new 20 years ago, that was when the Human Genome Project first mapped the human genome. They used one of the first teraflop computers at Oak Ridge National Labs to validate a lot of the work. That sounds like the end of a problem. We've mapped the genome. We've done it. We're done. We can go home. Well, no, we've just invented modern computational genomics. And you can look at what that's looked like, especially with relation to high-performance computing over the last 20 years to where we are today. And now I can send off, a Q-tip full of spit to different places to get a lot of analysis of my human genome, either for ancestry purposes or for looking at my genome for markers for different diseases. So that's evolved a lot over the last 20 years. What the exascale era might bring us, just one example, I look at we're probably getting within a generation or two of having the first supercomputing model of a human brain. If you can map all of the neurons and synapses in a brain, what would that bring you in terms of the ability to model anything from autism to Alzheimer's disease, concussion, stutters, addiction, anything that's brain related, I think will start getting kicked off, and it'll be a new generation of computational problems. But it doesn't have to be just at the highest end of supercomputing to be interesting. The whole area of consumer products manufacturing is affected by high-performance computing, and I have some of them on here. My favorite to talk about is Tide Pods coming out of Procter & Gamble. What does that have to do with high-performance computing? I talked to Tom Lang about this when he was still at P&G. He said it's not like the single-serving laundry detergent wasn't something that P&G hasn't wanted to come out with. He said they wanted that product for 75 years. The hard thing is to design there. They've already got liquid detergent, liquid fabric softener, but the jacket, the envelope, was difficult to design because you need a water-soluble plastic that dissolves immediately and completely in cold water, can be packaged, shelf-stable at a very wide variety of temperatures and humidities, not stick together in the box, and it can't cost more than, you have to be able to get the detergent and fabric softener in them on an assembly line at high speed, and it can't cost more than about 20 cents or so, or people aren't going to buy it. It's laundry detergent, right? And that winds up being a very complicated high-performance computing problem. I've got some other examples on here, but in the interest of time, I'm going to move forward. I do nevertheless want to spend a minute on this in terms of another grand challenge problem. Now, I'm going to bring a somewhat American perspective to this right now, but race relations in the United States are, this year, have been another major headline, and this looks a little different in other geographies, so I apologize for the U.S.-centric view of this, where I'm talking to Black Americans or African Americans about their viewpoint here. I think racism does exist worldwide. It just takes on a different sheen if you're looking at a UK, what does racism look like in the UK, or what does racism look like in China? This is an American perspective having to do with where we are today. And I was really honored to be joined by 5 prominent Black Americans from different perspectives in our industry to talk about their own experiences with regards to racism and their own careers inside HPC and beyond it, including I think an important question, can high-performance computing be used to help solve this problem, not only in the promotion of blacks in our community or other disadvantaged races in our community, but if we look at, for example, police and enforcement in the U.S. and whether or not black Americans are treated more harshly than other Americans, Valerie Taylor on our panel pointed out, well, there's data. We have data on these things. Looking for anomalies in data is allegedly something we should be good at. Is this a big data type of problem? Who's looking at that, and should we? I look forward to continuing this discussion with this panel and beyond, and I think is something we hopefully shouldn't be shying away from in our industry. I hope you will spend an hour to look at this panel if you haven't done so already. They really did an excellent job sharing their views with me on this panel, and I hope anyone here would view this to be an hour well spent or well invested to listen to these viewpoints. Okay, getting into some of our market numbers. This is what I'm really going to speed through. We've done detailed market reports, as always, in all of these areas. The high-performance computing market in 2019 was $39 billion. That was up 8.2% from $36.1 billion in 2018, which is a little higher than we had forecast. Government led the growth there. Now, the servers and storage, the big on-premise components you tend to think of, were actually much lower than that. Each were between 2 and 3%. The huge growth that we saw was in what we could call not just cloud, but cloud-like types of deployments, to include things like facilities outsources, managed services, other software contracts that are cloud-like but got absorbed into the software budget. And the other major trend you'll see is that the top vendors actually held still or declined a little bit, and the big gains came from the smaller vendors in this space. This is what it looked like from a product and services standpoint. You can see the servers and storage relatively flat at the bottom, and the other areas is what was really showing the big growth. Server market share, HPE and Dell are really quite close to each other at the top of the market. If it hadn't been for HPE absorbing Cray for the last 3.5 months of the year, and only the last 3.5 months of the year, this might have been the other way with Dell on top. Previous to that, Cray is included in other. They did report publicly 2 quarters worth of revenue for the first half of the year, and we moved them to other for that. This year, 2020, HPE will have the benefit of a full year of Cray contribution, so that might add a couple of points of share from this onto HPC for the year. HPE, Dell, IBM all down. Lenovo was the largest vendor that grew. Atos was the biggest grower here. They had a really fantastic year. Huawei grew even despite the fact that they've had a lot of political battles with the United States, which is the largest market. Just goes to show how little Huawei really depends on the U.S. for its sales, which come predominantly from Asia and to a lesser extent Europe. I name a few of the notable others there. There are many. In bold, NVIDIA is now a server vendor, as much as they protest that they're not. Those DGX and SuperPod systems are provided by NVIDIA, and NVIDIA is a server vendor in this market that we have to keep our eye on. Storage revenue market share, here's where Dell really pulls ahead, not just for Isilon, but a broad proportion of PowerVault and other enterprise storage products that don't explicitly target HPC, but you look at how much commercial HPC usage is out there, and if I'm using some enterprise storage in a partition and they tag my HPC budget for it, well, then I'm paying for it as HPC storage that my applications use, and that's where Dell and to an extent NetApp get a lot of their share. IBM is a bigger storage vendor than they are a server vendor. The top 4 there all actually declined. NetApp had a really poor year and fell behind HPE as a result. Again, Lenovo was the largest one that grew. Atos and DDN both had huge years, and that's really a double dip for DDN because Atos is reselling a lot of DDN storage. This has an even broader others category. If you consider all of the NVMe and flash and tape that goes into this market, Intel actually is now a storage vendor as well as a result of Optane in the market. So that's all things that we have to track in this space. Vertical markets is something I could give an entire separate hour-long presentation on. Notice that more than half of the market is commercial vertical markets. Manufacturing and financial services are the two largest segments, particularly if you put the two manufacturing segments together. The automotive and aerospace, which is on here, is large product manufacturing together with consumer product manufacturing. So I'm just going to have to breeze through this, but this is what the vertical markets look like in 2019. Generally, they don't change too dramatically year to year. We are seeing right now higher growth, for example, in chemical engineering, but this will change a lot in 2020 as a result of COVID-19, and that's something I'll come back to in the forecast portion of this presentation. North America, which is really U.S., Canada, is now a little bit less than half of the market. The higher they're all growing, but the higher growth is concentrated on the left half of this pie chart. Asia Pacific is slowly catching up to EMEA, and I would say by the end of this next decade, we'll probably be ahead of EMEA in overall spending. Server classes, the growth has been concentrated toward the higher end of the market, the supercomputer, and lesser extent high-end portion of the market. A lot of that is due to the fact that cloud is drawing off more heavily from the entry level and mid-range, so the growth disappears there from the entry level and then shows up in the cloud bucket instead. Software and services categories, we track all of these things. The things that I want to point out here is a lot of the dramatic growth coming in the other category, which we don't normally like to see. Or when we see growth in other, we want to double click on it and see what that is. And what it is here in the context of services is things like managed services contracts, which are cloud-like. In software, it's things that are SaaS-like contracts that are getting billed as software, but really implemented like cloud. So these are things that are very much cloud-like deployments that aren't showing up as being strictly in the cloud segment. We are revisiting our definitions for this year to look at how we categorize private cloud, hybrid cloud, and other types of cloud-like environments to see if we can categorize those a little better going forward. But what it really means is the cloud bring along is a lot higher than what's strictly reported in our cloud segment. Another evidence of that is that we saw the big growth in raw cycles and storage, the less differentiated portions of the market, whereas IaaS, PaaS, SaaS, they grew, but not nearly as much. That's getting drawn off into these other segments rather than getting reported as cloud SaaS. Maybe you had some of the growth getting reported as software other. So that's why we really want to look at that going forward. Now, when we look at the forecast, we do see ongoing growth. Machine learning is contributing to that. We see people reporting that their HPC budgets are going up as a result of HPC. I call this out as a result of AI. The HPC budgets are going up. This is in contrast to what happened with big data, where big data, as much as it was a huge trend in 2012, 2013, 2014, you think back to supercomputing in those years, everyone was talking about big data. It had almost no effect on budgets at the top end. Machine learning is different. With machine learning and AI, we are seeing a budgetary effect, and that affects our forecast as a result. That plus the fact that it's a long-term stable need to do science means that long-term growth, we're on the line. We're going to keep seeing 7.1% compound annual growth to $55 billion by the end of the forecast period. Cloud continues to grow at over 20% CAGR, and that's not even including all of these cloud-like segments that I'm talking to. Government sector is going to continue to grow. But the big thing that we need to talk about here is that COVID-19 in the near term is going to have a dramatic effect on the market, including some lost revenue. Now, that really is a wiggle effect that happens in the near-term years. By the time we get to the fifth year of the five-year forecast, it balances out again. So there's no real effect on the five-year CAGR, but short-term, there's a dramatic effect. And something I like to quote often is my business partner, Chris Willard, our co-founder, who said, when you make a forecast, it has to be bound by what's realistic. Reality has no such restriction. And that's why forecasts tend to be smooth and actuals tend to be wavy. Now, in this case, we see that it's here, and we've made a wavy forecast as a result. Here's in general, academically, what you're going to see in our forecast, what happens in an HPC recession, because the long-term growth rate is stable and the demand is stable, this is what a smooth forecast would look like. In a recession, what happens is the year of the recession, which is on this is year one, we see a retraction in spending. Most of that is spending that is deferred or delayed, not canceled. And therefore, when you get through the recession into what's here in year two, you get a bump year as the sales cycles come back in. Things that were delayed from Q4 of this year into Q1 of next year all come back, and maybe you have essentially a year that has 5 quarters of revenue in it. Now that's a bit of an exaggeration, but most of the loss from one year is deferred into the next year. And presuming that the economy comes back to a more normal behavior, then you have an artificial, really high growth rate from year one into year two. But what that is that year two is recognizing a lot of the delayed sales from year one. And then in years 3 and 4, you have a diminished sort of echo effect that has to do with budgetary cycles and people not making big purchases in back-to-back years. That can even lead in an extreme to a decline from year 2 to year 3. Because you had an artificially high year 2 and then a slightly depressed year 3. By year 4, you get a bit of an amplification, and then amplification. Then 5, it smooths out again. Now the troughs in years 1 and 3 are deeper than the peaks are high in years 2 and 4, which is to say there is some lost revenue, and we are going to see that over the course of this forecast. It doesn't all come back, but most of it comes back. Now, the thing is, we've seen this before. This is what the market looked like after the recession in 2009. 2009 was our last real down year. We've had growth every year in HPC since then. It's not a huge decline from year over year from 2008, but it wipes out all the growth. And then a lot of that came back in 2010, where you came back above the line, 2011 a little below where you might have been, 2012 a little above where you might have been, and back to 2013. Now, it's not perfect. There was other stuff that went on in this time frame, like the flooding in Thailand that disrupted the storage market. So there's other things layered on top of here that make actuals more complicated. But I just want to underscore that we have seen this pattern before and measured it as Intersect 360 research. So to do this forecast, we did the long-range forecast according to long-range budget planning, but then we modeled in what we thought was happening by vertical market as according to COVID-19, because the effect in, say, manufacturing is very different than the effect in, say, biosciences or national labs. And then we did secondary multi-year models by product segments and regions and the like to get consistency by the model. So we are going to have this year our first dip year over year. We're going to be 10% below what we had previously forecast for 2020. Now, that's not a 10% drop year over year, because we had been forecasting something like 7% growth, right? So we're now going to have 3.7% decline year over year. And that's $4.2 billion below the baseline forecast. But then we see the echo effect where a lot of it comes back, and we get back to normal by 2024. Overall, in total, because of that effect I said, where years 1 and 3 are below the peaks that we see in years 2 and 4. There's $1.2 billion of real revenue lost that doesn't come back somewhere. Now, there's significant risk in this forecast, and please pay attention to this next sentence if you're currently wandering and looking over at a different screen. The risk in this forecast is that when we did this forecast, it was predicated on the notion that in 2021, next year, the worldwide market gets more or less back to normal global economic activity. To the extent that COVID-19 persists as an economic damper through a large portion of next year, we'll have to remodel it, right? So if portions of the economy don't come back, then we're going to have a prolonged depression. This forecast is based on the notion that in 2021, at least by the end of early 2021, we can be back into some more normal economic activity. This is what it looks like by vertical market. According to our forecast, the hardest hit vertical markets energy. Oil and gas was already having a downtime of it prior to the COVID-19 pandemic. We even saw a brief moment when futures on oil went negative. It was sort of a weird anomaly. So oil is still really depressed. That keeps down spending in the oil and gas market. Retail is having a big effect. Large product manufacturing, which is that automotive, aerospace, those are the top three. Biosciences is actually quite stable and, in fact, seeing a lot of intensification this year, as are the national labs and academic spending. So those are the relatively stable markets through this forecast. Then there's going to be an echo effect into products and services. The biggest hit areas are the on-premise deployments, the large server acquisitions or cluster acquisitions, the large storage acquisitions. Cloud actually goes the other way. When you constrain things that are on-premise, you can use cloud to pick up part of the gap. Cloud does really well with uncertainty. So cloud gets an even bigger bump in the forecast than it would have had without COVID-19, and that's fully described in our forecast documents. Regions, the interesting thing is here, when we first gave preliminary guidance in March, heads up, forecast is about to change due to COVID-19. At that point, we would have thought that Asia Pacific and then EMEA would be the hardest hit areas relative to North America. By the time we actually came out with this forecast, it was the other way around. North America was the hardest hit area, and the other regions were coming back economically more strongly, regardless of how you view the virus actualities. If we monitor the economic activity, it's the other way around. So conclusions, HPC is a long-term stable market that is buoyed by a lot of these trends in exascale, in AI. We're going to have dramatic variability due to COVID-19. It comes back. This will be a down year. Next year will be an up year, presuming resumption of more or less normal economic activity, and we're seeing intensification of competition in processing elements and a lot of spread in the vendor community. One other quick thing, we've released our new user vendor ratings, broad-based research across 4 different modules, users giving ratings of processor vendors, server vendors, storage vendors, cloud vendors. As for the processor vendors, we did the survey prior to Marvell's shift in strategy around ARM, so apologies for that. That's not reflected in this. This is just one of the multiple charts we put out, future outlook for HPC. How do users feel about these different vendors looking forward? And you can see some of the top. Cloud was interesting in that it's rare that you see things really go into negative ratings on these things, but in cloud they did, where there was definitely a dramatic top 3 in most of the charts that we put together, and then kind of one that was neutral and everything else going negative. The processors are probably the chewiest area, where to really interpret the data that we got, not just from this chart, but overall, all the different things that we looked at, what users are saying they want right now is either Intel Xeon or AMD EPYC CPUs together with NVIDIA GPUs, and then things like Intel GPUs, AMD GPUs, or ARM CPUs were further down the charts. And yet that's not the way the market's developing, where each of these 3 vendors is starting to move more toward integrated systems, which is going to have pressure on, well, which of these things that are lower down in user ratings are going to get pulled up as a result. Here we are at the HPC Advisory Council. I forgot to update this chart. We already did HPC on Wall Street. We will be at Supercomputing November 16th to 19th, and we'll look forward to that as a virtual event. Thanks very much. I'm happy to take any questions.